Hi, good afternoon, everyone. This is Jayant Kohli back again with our Logical Talk number 16. Uh, and thank you so much once again for all your encouragements that we have kept going month after month and now doing our 16th Logical Talk. Uh, by the time everyone joins in, let me just do our customary introduction once again for people who don't know us, who have joined this discussion for the first time, or those who are not our current GCMS or software users. Uh, Lawbit offers SaaS-based risk and regulatory compliance solutions for enterprises, which comes integrated with the global regulatory intelligence, which covers all area of laws. Just to give perspective about India. In India, our regulatory intelligence covers across more than 2,000 plus laws, 60,000 plus compliance, wherein our team has read more than 1 million pages of laws across from 75,000 plus documents and created a intelligence which is easy to understand, easy to use and to track your regulatory risks across organizations. Today, our software is being used by clients, not just in India, but globally as well, wherein their respective countries' regulatory intelligence is also embedded into the software. We have more than 300 plus entities, clients who are using our software as of today. We're in 1,500 plus locations been mapped. And we have a team of 80 plus legal and tech professionals who are primarily working from our GDC based out of Jaipur and are helping us create and update the regulatory intelligence for all our clients globally. We have also partnered with law firms in different countries to help us understand the nuances of the laws for their countries so that we can serve our global clients well. Great. So let's now jump onto the agenda for today. Great. Today we're going to be discussing on one very important aspect about the board reports. In fact, how this idea came to us is that Mayank, few of you would have already known Mayank. Mayank heads our advisory and implementation function. And Mayank is a lawyer and a company secretary himself. So Mayank and his team, they came up with a beautiful article on board reports and disclosures. Once the article was released, there were a lot of queries which started coming into us to understand more about the nitty-gritties of the board reporting and what all should, what all disclosure should happen. And these queries were coming from different clientele. So clients which were private limited companies, listed clients as well. We thought it's a good idea. And again, still some companies are preparing their board reports. So we thought it's a good idea that we should delve into this particular subject. So we requested Mr. Pawan and Rahul to come and share their experiences and learnings on this subject. And happy to welcome Mr. Pawan Jain. Pawanji is company secretary and head of compliance and legal for Noida International Airport. The organization is YIAPL. Pawanji comes with more than 18 plus years of experience into labor and employment laws, secretarial, his title itself says that he's head of compliance. So across all areas of laws is something which has been his strength. And one good thing that I would want to, obviously share about him, that whenever we have Noida International Airport obviously is using our solution, and when during the interactions of the last more than 2.5-3 years, what we have always seen that there have always come, more curious question from him. His inputs have helped us understand, improve our regulatory intelligence and the processes as well. So I'm sure with Pawanji's inputs, we will have a lot to learn and take home with us. I also have Pawanji, thank you for your time, and we look forward to engaging discussions. And I also have my friend Rahul. He's a company secretary himself, holds a legal degree as well as business degrees. And he is CS and head of legal for BKG Foods International Limited, which is a listed entity. And Rahul would bring a lot of interesting perspectives from a board governance reporting from perspective of a listed company. So with Mr. Pawan and Rahul both being here, I think we have a very balanced view from both listed companies as well as the private limited companies. Plus, with their experience, they also bring a lot of focus into what the modern day organizations, even if it's a private limited company, are facing the challenges while preparing the board reports from a perspective, or specifically from the investors' perspective, the directors' perspective, who are possibly an independent directors or nominated directors from the investors, what they are primarily looking at. So we look forward for both of your expertise in the discussion. And also, I would have my colleague Mayank uh, uh, doing the moderation, and he also will share his practical understandings basis whatever clients, 300 plus entities he has worked with, and help them with the compliance solution implementations. So Mayank, again, I don't know, I can see you. Okay, if your camera is off, please bring it on. Uh, and uh, and one quick disclaimer: this is as always, this is more of idea sharing platform. Whatever views Mr. Rahul and Mr. Pawan are sharing today, they are their personal views. It has nothing to do with the organization which they represent. It is a part of our initiative of taking the knowledge back to the general, to the community, and learn together, and uh, don't form an opinions. These are not advisories. These are our experiences which we are going to share today. So quickly on to agendas. What we were going to talk about is need and objective of board reports. What the layout of the annual report should be, how the procedure and preparation of annual report and board reports it happens. Some applicable provisions to, and the structure. In the structure, we will obviously going to talk very detailed about what all components you will have on board report, and there are some specific items which we will dwell deeper on. And obviously, there were a few questions which came from our users basis the article which we published. And Trishul has also shared the link to that article. You may also bookmark that article, because that's quite an handy one. We will get into those questions. And like always, I would again reiterate, feel free to keep asking questions onto the chat box. We will try and pick up those queries as we are discussing, or if the time doesn't allow us during the discussion, we would try and address those queries during our Q&A sessions. So, Mike, over to you.
Thank you, sir. Thank you. Good afternoon to all. Hope I am audible. Good afternoon to all. I welcome and thank you all who have joined this webinar today. Today's webinar is on the board report, which is very close and important aspect to all the company secretaries which are present here in this webinar. And we'll try to cover all important practical aspects with respect to the preparation of board report. As the name suggests, the board report means the board of directors has to provide such report to its stakeholders, and the board of directors which provides leadership, strategic guidance, and objective judgments. They are also accountable to the stakeholders of the company and the statutory authorities. The efficacy of the board of directors is not only determined by complying all the legal obligations, but more importantly, how they are taking up their responsibility for betterment of the shareholders or the stakeholders of the company. So it is mandatory for the board of directors of every company, right? So there is no such exemptions right? But it is mandatory for each and every type of company to present financial statements to the shareholders along with the board report at every annual general meeting. So apart from giving a complete review of the performance of the company for the last period under for that report is they have to also present what are the material changes till the date of the report had been occurred, and the significance of various national and international developments which had happened, which can be impact on the business and indicates the future strategy of the company. So thus board report is a comprehensive document representing including both financial and non-financial information, serving to inform the stakeholders about the performance and prospect of the company. For a listed company, preparation of annual report is a task, and planning starts right away from the closure of the financial year. The work start from finalizing the annual report agency. Most of the listed company, they hires the AR agency who assist in designing the layout of the annual reports. AR agency helps the company to finalize the theme and cover options. Then the company starts working on narrative content and the chairman message and finalizing of that theme. So preparation includes two parts. First is to finalize the statutory part, and another is the non-stat part. And the statutory part, which is mandated by mainly by the Companies Act and SEBI LODR. Under Companies Act, main provision which mandates board report is section 134. We all know, which read with the rule 8 of the company's accounts. They are the guiding provisions of the board report in the Companies Act. Apart from that, there are various other provisions also there in the Companies Act, which are also, which mandates companies to disclose certain information. Those sections are, maybe 67, 92, 129, 135, 135, 131. As per the applicability or as per the situations, companies have to disclose such information. The board's report of the companies whose shares are listed, again, they have to abide by the SEBI LODR regulations. And, the relevant clause 34 and 36, which, mandates the listed company to disclose the information in their annual report and to publish their annual report to all their stakeholders. Further, other regulators also mandates companies to disclose certain information, like RBI. So maybe RBI mandates BFSI companies and other regulated companies to disclose certain kind of information there in their annual report. Right. So likewise, various IRDAI or other relevant authorities mandates, by virtue of various regulations, circulars, rules, directions to disclose certain information in their annual report. So in today's webinar, we'll discuss the need and objective of the board report and applicable provisions pertaining to board report and what is the structure of the board report. And then we'll take the questions at the end. But yes, everyone who has certain questions, we can take up those questions during the webinar also. So I'm handing over to Pawanji for taking the session ahead.
So first of all, I would like to take this opportunity to express my thanks to Mr. Jayant and Mike and to entire Lawbit team for giving me this opportunity to express my ideas. And big thanks to all of my colleagues who have taken their precious time out of their quite a tight schedule and would like to know certain good things or whatever thoughts about on the board report. Thanks to all. So before we start with the board report, I think for me, just I'd like to give you one thought, which I personally follow in my day-to-day professional life. What the Albert Einstein said, he try to become a man of value than a man of success. Man of success means the more he gets out of the life, what he puts it the and a man of value, it's always he gives more what he receives. So because what happens, there's certain kind of communications which certainly give you certain sort of a leeway and the flexibility. There are certain items which are quite a straightforward. It's a statutory mandate. You don't have the liberty. But there are certain figures and there are certain titles where you have to play a professional judgment. And there you have to become a man of value than a man of success. Because for you maybe a lining a two line, but the person on the other side who's reading the director's report, quite a important material you are giving to them, communication. So because all my colleagues, I am sure it's not something I would like to tell you the new things that you already know in the law, what is coming out with a part of the board report. But I think the principle you should be very clear because the board report is quite a critical, important means of communication. It's entire appraisal of a company. For example, what about do your SWOT analysis? It's just like a SWOT analysis of a company. So I just take you one example of management discussion and analysis. Okay, so where there is a one line only, management discussion analysis, and there are certain bullet points or industry outlook and development, what the industry structure, your SWOT analysis, threats and opportunities. But where you can play a professional judgment and can be transparent as much as transparent and bring some value additions for the audience. It could be external stakeholders, it could be a regulator, it could be employee who is reading, allowing on the reading on the board report, which does not have any access to entire financially what the company does entire throughout the year. So that's I personally follow and advise all of the colleagues to be a man of value while drafting any compliance function or any board report, because that definitely certainly guide you. Okay, thanks. Now I take a liberty to jump on the presentation. So we'll take discuss about the board report. So first thing I already described about the principles because we have to keep in mind the transparency in the integrity. So in the coming slides, in the coming slides, you will come to know what the legal source, where this entire source will guide you for how to draft the board reports and the particular regulations, sections, and everything. But here this slide we're talking about the certain principles set of things. So what the board report is all about. So if we talk about the need, the first need of the board report is coming of the Companies Act. This is the legal first, the fundamental principles of the Companies Act that guides you. It's a mandate you to have a board report. Then then the comprehensive and the coverage. So definitely the comprehensive coverage, I would say key now these certain time because these certain source of law is already defined, certain rules is already there. It's coming from the LODR, it's from the Companies Act and multiple sections. So for example, in the coming slide, you will get to know at a one slide key what are the source that's help you to draft a board report. So comprehensive and comprehensive, it means it gives you as much as clear and most accurate data. Because tomorrow when the board reports goes to you, any banks, any regulator, and this is approved by the board. So it could be I would say it's become a settled evidence also. Okay, what the disclose you have to what you have disclosed to the shareholders or the stakeholders. So certainly in the future, whatever you say in the board reports, it will stand by a word against a company. So it's a compliance coverage. The risk identification and mitigations. So board report is all about the company appraisable and the business. So now for example, in the risk identifications, because what happens if the company does its business for the and based always be business on a continuity plan. So there are always inherent risk in every kind of business. And there's always be caution in all the stakeholders, particularly the shareholders, how long the business is sustainable. Is that the money I've invested in a company, it's really fruitful? Or what happens in the next year? So for example, if you see in the automobile, if we talk example from automobile, then now there could be the EV, there could be some alternative fuel. So for example, your company is based on only on the diesel and the petrol fuel. So there could be alternative fuel also. So is that company sustainable, the kind of business? So there should be a elaboration of the risk, the company, the inherent in the business, and their mitigation plan should be coming out from the board report. The regulatory and compliance, I don't want to dwell much upon the regulatory and legal compliance. I am sure this all respectable colleagues, they have very good hold of the entire legal knowledge. It could be the Companies Act, it could be the LODR regulations, and it's a ICSA guidance note on the disclosure of the board report. These all it can available, and I think the future slides covers all these things. So I request and I welcome all colleagues to note down if you wish to have the entire source of. On the business continuity, so I partially have already covered under the risk identification and the mitigation plan. So because it's the board report, so I would say board report uh, is the directors who definitely have a to always be. I would say the directors have a two primary responsibility. I am not talking about the fiduciary duty and the much elaboration of the duty. They are supposed to give strategic guidance to the organizations and they oversee the management performance. And now these two things has to be captured in the board report because they would like to know how the management performs the entire throughout year and what strategic guidance we have given to the management. It's really coming out, it's really being implemented and how they can evaluate their own performance. And that is all the board report just talks about. And one of the critical element is that of these two, if we combine these two elements, it talks about definitely gives some heads up to the business continuity. So, considering the interest of time, I think there are certain items I would not say that's enough require much of a deliberation. I think mine can also support it. These topic itself requires a one sort of a one webinar on a business continuity because
Right.
we know all the environmental concerns, ESG norms, and all these things. How we sustainable all kinds of business. So, say for example, if industry coming or on the food industry or on the automobile and the way we are dependent on the environmental resources. So how we are nurturing the environment and how we continue. It's not about the environment, it's the sustainability of the employee as well also. So we talk example of the employee sustainability also nowadays. Now they are working hours. There are a lot of a discussion in the limelight. How the working hours counted. The moment you step down from your home and you start working in the when you join when you come to the office and then exit from the office and reaches to the home. So these are because ultimately all our resources are quite a passive and the employee resources is only on the active resources. So optimization of the all the resources depend on the efficiency and productivity of an employee. So I think these should be covered because I already told you there are certain principles you don't find absolute answers in all the laws what should be go into the board report, but there should be a certain principle I'm sure that will guide you and will not be stop you to put all these facts in the board report. And the last but not the least, I think the integration of the ESG consideration. Now, I think it's a now the companies are evaluated basis on the environment, social, and the governance practice, because now it's a very now it's become a now matter of concern. How the organization is responsive to the environment, of the social concerns, and the governance practices. Because ultimately, if we talk about the first, take up the environment. Okay, now definitely the environment, you cannot be now you are interdependent on the different resources of the environment. Standalone, isolated, you cannot be survive. You have to be integrated
Right.
and sync with the environment. So definitely you have to be these matters of concern, how your energy resources have been conserved, what you have done on the environmental front, what the renewable resources you are using, and how you are replacing all the energy resources. So these it should be the principle you should be keep in mind. The social, there is a equal distribution of income and health, income and wealth. All the privileged person may not get the resources what you have. So what the organization is doing, I would say example of the CSR would be on the social side, and the governance practice you know very well. It's not a I would not say legally defined terminology, but it's a gamut of multiple principles, ethical and practices. Thank you, Mike.
Yeah.
You just you are have a liberty to stop me if I am taking too much time. So we have to respect the time constraint. So
Right, sir.
you have free to just yeah.
Right.
Carry on to the
But
next slide.
I think, sir,
Uh,
on the last point, that is integration of ESC considerations. So ESC aspect has evolved a lot. As we have seen, what SEBI and other regulators, they are focusing more on ESG pointers, and they want companies to disclose as what they have done and they are planning on this ESG front. Yes. So I think all pointers and the parameters in this slides are equivalent important for company to disclose in their board report.
Okay, so I think there's always be some confusion about the annual report and the board report. So, because I have experience from a all listed and non-listed entities, so I would say uh, the annual report concept is coming out from the listed and LODR regulations, listed obligations. And the word director's report is a one sub element of the entire annual report, and the source of law is coming out from the Companies Act. So I would say annual report is a larger gamut, and board report is one sub element of it's more relevant for a private company. But
So
I think if you
can
see,
we say
yeah.
listed company has to prepare annual report, a private limited company has to prepare board report?
Right, right.
Yeah.
For a layman perspective, so for a private company, the board report can say annual report also because but if you go by the technical and hardcore technical concept, so you are right. But for a this is yeah, but this is a right understanding for the time being. Okay, so if we talk about now the layout of the annual report, and this if you can see the slide is quite self-explanatory. I don't want to take you or deliberate one thing which is already on the slide, but definitely I just take some of the important things which, according to me, what your colleague should know about the annual report. So now, if so, Mike, Mala, how's
Yeah.
the plan? So should I take up all the bullet points in the
I
what the
think the
plan is?
pointers are
Yeah.
self-explanatory. So I
Yeah.
have one, two, two questions out of curiosity I want to ask. So as under the
Okay.
corporate overview, there is summary of key financials, right? We have to present a summary of our key financials. So can we disclose the key performance highlights, that is financial and operational parameters as per our way, or is there any restriction, or is there any way to present those parameters or those financial summary?
So, Mike, this is a good question. So there are certain parameters which already defined in the rule. For example, I would take a turnover ratio, then the net profit ratio, and the interest coverage ratio. So these are the certain ratios which gives a key how the company is efficient in generating their cash management. So I'm sure ki mother they not a right forum to explain all these ratios. So but I would
But I
like to
think these
take a
parameters
couple of
are,
yeah,
these
right.
parameters vary from company to company. If companies in retail or companies manufacturing, their parameters differs from from that basis. From
No, Mike, so
okay, what
parameters
industry
I
they
would
are in.
say no,
Mm.
parameters quite uniform because otherwise you cannot compare one company on apple to apple basis to other company how a company is performing. So for example, take example of interest coverage ratio. Okay, so I'm sure no company survive without a debt. So it will definitely indicates how the company is capable to service your debt and the interest. Okay, now you take example of debtor turnover ratio. So how many times you are recycling your data? How many you completing one cycle? The cash from a purchasing of raw material to the sales generation. This is one cycle you complete. So how many cycles of you generating completed in a year? So this is so for example if it could be a service industry it is also a data turnover ratio. For a manufacturing company cycle could be long because it will procure a raw material, convert into a finished product, and then sales in the market. So cycle is very to vary, but definitely that turnover ratio has to be uniform. So that's why. So because for a shareholders, how can you compare whose company is performing well? So these parameters, I would say uniform and defined, but there's no bar on that. You want to give some other ratio, for example, fixed assets coverage ratio. Okay, the fixed assets coverage ratio, you won't find it in absolute definition under the any rule or LODR regulation, but it gives how your fixed assets are funded from a company side. It could be your self-funded or the from debt or the equity. So it gives a very good comfort for a shareholders. Yes, there's a good fixed asset base without funding from the bank.
Thank you, sir. Thank you. Uh, would like to add, would like to give some information about management discussion analysis. And I was reading guidance note on board report which is published by ICSA, and where that guidance note mandates certain information to be disclosed under MD&A, and that information is quite comprehensive, and they have mentioned a couple of points what companies have to mention while disclosing the MD&A, like they have to present the SWOT analysis about industry structure and developments, what are their risk concerns, and about the
Right.
economy. Yeah.
Thank you, Mike. So just regarding now, take up these two topics on the risk management. I would say just touch upon a little bit on the risk management. I think so. On the risk management, I think the word is not a quite a unknown and quite familiar in the professional fraternity. What the risk management, but just two things I would like to touch upon here. So risk management, it's a holistic know key how that the risk identified you what the risk management you have, but there is always be risk reporting because whatever there's certain threshold when you touch upon and identify the risk in the particular organization. So mitigation measures sometimes which is not fall in the prerogative of the board. And sometimes it will go to the shareholders also. Whether this, for example, you identify the 1,000 crore risk is there. Okay, there could be sustainable issue or the business continue to after the COVID. So I think the risk reporting normally not there in not the recommendatory in the director's report, but I would suggest you should cover ki whenever any risk management touches upon any particular threshold, there should be a report mechanism where if there is a parent company, if you're talking about the risk management of a subsidiary, so these threshold decisions should be taken by the parent company or the shareholders. It depends on your what kind of risk framework you have, but definitely you should have some risk management framework.
So this means the companies have to conduct the risk assessment every year, sir?
Yes, definitely, because in the dynamic environment, entire economic, political environments keep changing. I would say the regulatory also on a year-to-year basis. So risk also keeps changing. So there could be a top 10 risk, but in the coming year, for example, if they change in the government, a change in the, for example, Ukraine war is a good example. These changes happen and it could be added to a new risk. So I would suggest in all the company there is a risk management committee which supposed to meet at least quarterly on a quarterly basis, and there should be comprehensive risk management framework.
And apart from that, can we include the risk management policy while disclosing the materiality assessment in the annual report? Right.
Right, risk management
Huh.
policy always be uploaded. We just make a reference of the website URL because sometimes there are a lot of changes in the keeps happening in the policy. So I would suggest just you mention a URL because all the policies are because there are certain policies which could be meant for the internal management and one from the public. So this is depending on the governance practice of a particular company, how they want to disclose, have a risk management policy. Okay, and on the management discussion analysis, I just touch upon the SWOT analysis. I think this is quite the way to be able professional and the individual SWOT analysis. It is equally applicable to the company. What are the opportunity and the threats, and what are the situation and the that things.
Pawanji, just want to add one thing to the risk management because in the way I think social, economical, and geographical changes are happening the world over, the risk management is becoming more and more important for the board and for the stakeholders also. Because today, one thing is common across any kind of a company. It's no longer a proprietary driven company. Any large organization, if you say, even if it's not a listed company, even a private limited company is there, you still have some investors on board. Now, these investors may not be running your day-to-day operations, they may not be involved in your day-to-day operations, or even if it's not a VC, you would have some individual investors also, where you have options instead of going to for IPO, you can have crowdfunding platforms also who will support you. So maybe there may be many stakeholders, shareholders who do not run your business but are interested to understand how the money is growing and how safe, secure the money is in that organization. Now, one very quick,
Right.
very recent example which comes to my mind is, and I was reading, I think today morning, due to the turmoil in Bangladesh, pharma companies have a lot of pending shipments which they're not able to send to the Bangladesh because their initial money is also stuck and they don't know whether if they send shipment they'll get money or not. This also impacted a lot of hospitals in India who were relying on the patients from Bangladesh. There is a dip in the last one month, more than 50% dip in the patients which are coming to these hospitals. Suddenly, because of geopolitical environment in a neighboring country, it has nothing to do with us. We have seen these businesses have a very huge risk. Now imagine somebody has a very high exposure in that country. It could be a very dire situation for that organization. So knowing risk and in a holistic manner and also presenting it so that the stakeholders can be well informed and take the corrective actions is pretty important. And Mike, I believe gone are the days when the risk was stagnated for months and years. I think
Right.
today risk changes with every month.
Every
I don't
month,
know
yeah.
if I don't know if regulators will come back and say, okay, if I don't want an annual review, I want a monthly review of the
Monthly
risk.
or quarterly review. Yes.
Right. So yeah, I think, but at least on a annually, it's important to today review your risks.
Okay. Now the preparation of the annual report, I think board report. So it depends the company where you belong and it's about your governance practice. I already settled certain principles, how much transparent the governance practice you are following in your company. It depends on when the preparation starts. Because there's certain critical data, because if the board reports has to be on 31st March, definitely you cannot expect the stakeholders to reply all the data within a 1 day or within a week. So I would suggest first you prepare a standard template for each of the stakeholders. Give what kind of data or what amount of time you expect the data. There should be one Excel sheet you can prepare. And at least I would say I would like to add one thing. What's my personal experience, which I have not seen in none of the company, because it's always be a sort of initiative from a company secretary or the legal professional to start preparing the board report. But if there could be some sort of a message from the top management, there could be chairman or the MD, like now the year is about to be end and we now in the preparation of the board report and just a message to the entire company. So I think what I believe what are the challenges and the stakeholders will face in giving the data and taking the data, I think would be mitigated to the extent, because something in the seriousness or the sincerity in the giving the preparation of the board reports would definitely be more if there is some tone from the message, some sort of an annual message. Because we always be put a pressure ki, oh, there is a board meeting and we need to prepare a board report. You have a stakeholder this and to and fro communication going on. So I think there should be some trigger event. There should be start event when should have a there is a message from the MD or the top management CEO, whatever you think it's your. So I think once after this message, so there should be some planning. So since I'm sure over to Rahul also can add on, because he has got extensive experience in preparation board report from a listed company. So I'm sure his challenges and his engagement and his I cannot imagine, but I know this really I'm working with a listed company. So definitely there is a planning in the and the planning phase. Okay, then you have to identify the right stakeholders from where you have to data, because now you much clear key what is the structure of your board reports, and you know from which pockets and which information is coming from and by what time. Then definitely there is collection of the data, because the data comes in, so it doesn't mean ki you just take a data, copy and paste it, but definitely there is a value additions, absolutely clarity, because the principle you have to very idea there should be clarity and the accuracy of the data. So it's not like whenever there is a you have to cross verify all the data from one row item to another, the totaling and everything, so that whatever goes into the board report, because it's ultimately company secretary and your responsibility. So when your director is reading it, the shareholders or the investor analyst is reading it, so they will come to his company secretaries also and the legal professionals key why this is a this data and all thing, and they create a hue and cry situation sometimes. Okay, then this data is combined, is refined and collated and go into the board report. What I suggest there should be quality check also. So I would say what's my experience? We do always be 2 level and the 3 levels checking. One is a maker and reviewer at least two. One from a not from your team but from a some other team. For example, if you are from a legal and secretarial, take view from the finance who does not know about the board report. If as is he just like reading a storybook, let him to read and just see whether he can make able to gather understand and the facts and the things in the story all about, because stakeholders always be a bias in giving their decisions independence, and sometimes then you make out it does not make sense. This sentence is does not giving a value addition. It's what not the board of directors is looking at these kind of things. So I think that should be done. And then we always, as Mike is already in the initial opening remarks already said, we always engage PR agencies and all that. Then they do all the formatting and the proofreading and everything. And ultimately, we put up to the board and the board approves it. And then communication to the shareholders.
So Pawanji,
Yeah.
can we approve financial statements and board report in separate meetings, or we have to approve both agendas in a single meeting?
Because if you see under the Companies Act, the board report has to be along with the financial statement. And I think financial statement is quite an integral part of the board report. So what happened? Financial statement, I would say then, both things according to me, the good governance practice, it should be approved together. But the Companies Act also gives us some liberty, and it is silent cases to be approved at the same time. So there's a catch in the Companies Act interpretations. So it happens in one of my experience. It's happened ki financial statements are approved first and then the board report later on because certain facts we are not prepared. So, but because there's a date in the board report which is published. So I think to avoid all these things, I would suggest make all the things in line in place unless the extreme situation beyond your control. That should be my advice. It should be approved together.
Okay. And also, can we approve by passing the resolution by passing resolution by circulation, or that meeting should be in physical?
I think now after the COVID, they have given the liberty. If I think I'm not wrong, now there is an exemption that the board report can be approved through the circular resolutions. Rahul can also correct me if I think
Rahulji,
this
Yeah,
is.
via
you
VC, we can pass via VC, we can pass the board resolution or board report through circulation. Because nowadays a VC is allowed by the Ministry of Corporate Affairs.
thank you, Rahulji.
Thank you, sir. Sorry, yeah, I've taken so much time. So, but
Yeah.
yeah, I think this is already there. So, Section 134, Rule 8, this all talk about from where it's gives all heads up where you should cover in the board report. If any questions are
So,
there, so I can like to address here. Yeah, over to Rahul.
Rahulji,
Yeah.
Yeah. Yeah, first of all, I express my thanks to Jain ji, Mang ji, Pawan ji to give me my expression or insight to the board report and our annual report. And first of all, before the discussion, the points, there are so many points coming to my mind. There are for common laymen, they are asking what is the annual report. So annual report is a document created by the company or organization that summarizes its activity, financial performance, and operational and future plans. Okay. Now, second question is arise in my mind after knowing the what is the annual report. Second question is what is the importance of annual report? So from annual report, we can trust on the company by transparency, by accountability, by trust building of the investor, customers, and other stakeholders by providing clear and honest information. Now, the third question is coming. What are the benefit of the annual report? So, third, for this, it's a benefit because our performance can track by the future prospective investors. It's a communication tool by way we can express our financial performance and other things to the readers of the annual report. Now, fourth question, who are the readers of the annual report? So investors, employees of the company, customers, regulators, other vendors, suppliers, all are the, you can say, the readers of the annual report. Okay, now we are going for, with the permission of all, may I jump to PPT? So which provision are covered for the annual report? Okay, so section 134 of the Companies Act. Under the Companies Act, they have defined many rules as per the chapter. So in chapter rule number 8, Companies Act, Companies Accounts Rules 2014 covered for the board report and accounts. And being a listed company, I am handling the listed company. It's a very important regulation for all the listed company. Securities and Exchange Board of India listing obligation and disclosure requirements, regulation 2015. In a listed company, we are a child and the teacher is our SEBI. We are very we have to be very careful about the SEBI if we are doing something wrong, and that SEBI is always SEBI give us a surveillance to us. And the secretarial standard is our godfather, because being ICSIs provide us degree. So I'm very thankful to the ICSI, because they have time to time they are providing us the Bible for like ICSI standards, ICSI referral to the board report, ICSI guidance note. So being a CS, we are very blessed by ICSI and all the communities like CA, CSI, CWI. Being collective, we can meet a board report. Before the saying about thing, I can tell a story. Marriage are coming by the marriage cards, okay, invitation card. Let's suppose the Nana family, Nani family, material family, I mean material family, Chacha family, Chachi's family, they are their departments. Okay, being at the time of preparation of the marriage card, you have to collect all the information: who are your nanas, who your nanis, and what are the contact details. And though after that, you have to do the engagement. So it's your board report, because in engagement, you should collect closely held peoples are coming in the engagement. So you can say the only board of directors and invitees which are allowed by your committee or board, they are only involved in the board meeting. So they are engagement. After engagement, you have to pass a notice. So you can say that the structure of the invitation letter. So we have to go to the other people's like our shareholders, investors, because nowadays anybody can join the annual general meeting. So the annual general meeting is our marriage thing, and this where we can pass the our annual report and board report. And you have always see in this thing in the annual report that dividend. It's like मेरे मामा की शादी में, मेरे चाचा की शादी में जरूर आना, because dividend is a very good sweet cons or for the investors. So these are the things I can correlate with the annual report in the at the time of preparation. Now, as Pawanji tell us that at the time of preparation, we have faced some difficulties, as you know that in family members, somebody tell it is happen, it will happen. So we have to collate all the information and put in the board report. And for that, in old age, they our dadas, nanas, etc. We have to do something, their plans. So it's our vision of the company, what they are thinking, what we have to take planning. So these are my short story. I can tell that what is the annual report and what is the annual general meeting. And one more thing, in a listed company, annual report like a scorecard of the children, because first quarter, second quarter is half yearly result, third quarter is a simple test series, fourth quarter is an annual report. And after that, we have prepared the whole comprehensive result in which the teacher said that it's a grade, B grade. It's a financial and operation performance, because in which the teacher is giving us the grading, how the you can say behavior of the student, the cleanness of the student, punctuality of the student. So it's you can say that it's a scorecard of the student. So man, please go for another slide. Next slide.
So just one question. As you know, there are so many applicable provisions, regulations, where we have to gather the pointers that we have to include in the annual report. How you are ensuring that whether whether you have included all the pointers that are applicable that you have to include in the annual report? How you are ensuring it's quite difficult to ensure the comprehensiveness that yes, we have included all the points as per the applicability. It's really difficult. How you are ensuring, sir?
So actually, it's already defined in the section 134 and SEBI LODR in regulation 34. They have used some formats and bullet points, which we have to include in the annual report. You can say that the financial performance, you can say that in the MDA report, we have to mention the SWOT analysis, ratios, HR concern, internal control, financial control things. So
But sir,
we
there
have
are some
referred.
independent provisions as well, sections as well, which are apart from apart from what the sections 134 and 134 in the regulation 34, stating some independent clauses sections are also mandates to disclose the information and to gather.
Yeah,
Yes.
Yeah. So you can say that if any company issue ESOP, so we have to disclose ESOP disclosure.
Yes.
Is NBFC, we have to do disclose any type of separate disclosures. And for example, if you are following the CSR provisions, you have to disclose the CSR provisions.
As per section
If you have
135.
associate or joint venture companies, so these are the disclosure which have to disclose in the annual report. For first of thing, relook your organization. First
Okay.
of all, what are the provisions are applicable on your company? Collect and look. If you are in the NBFC, if you are in the FEMA guidelines will be applicable. If you are in the pharmaceutical company, if you are in the telecom company, IDA will be applicable. If you are in the automatic company, so you have to collect all the information and make a checklist. As Pawanji said, before making the annual report, you have to make an internal checklist as per the organization. Then go and do your first task and tick the same, and second task tick the same. So it will very useful and very easy to the make annual report.
Thank you, sir.
So structure of the board meeting, so board report. So let me structure in the way that you can find the key informative, very quick and very informative way. There are two type of stakeholder in company. Okay, first internal. They can be a director, key manager, personal, employee, shareholders. I am telling shareholders internal because you know that the shareholder is the owner of the company. So I always treat the shareholder as an internal part. And second, external customers, regulators, suppliers, creditors. So we have to disclose all the things, and it is very informative information to all. So you can think, because, for example, labor or middle level management employee wants to know what will be company do in 5 years. So he will read the management report, MD report, because in which the economic outlook, company's outlook, and industry outlook is mentioned by the company. So he can read their perspective, and in perspective of the regulators, they can search the financial performance, how you are comply with the ESG norms, because in BRSR, we have to mention how we are effluent out from the factory, and what norms and what type of vessels we are using. So these are the BRSR compliances. So the structure of the board are internal and external. In internal, directors, I already told, directors, shareholders, and employees, and external customers, suppliers, creditors, regulators. So these are the points which are covered in the annual report. So I think they are self-explanatory. I will brief about some points like risk management is already covered by the Pawanji, very good, very well. And corporate governance report in which we have mentioned the how many, what is the composition of the board, what is the composition of the other committees, and what are the other committees which I have made by the internally in company, how many, what are, how many, what type of directors you have in your company, like independent director, non-executive, executive director, nominee director, additional director, and the composition of CSR committee, audit committee, stakeholder relationship committee, and all the things. And BSR is a very hot topic nowadays. We have 9 principles as set out by the SEBI. And apart from 9 principles, if you are got a Union Global Compact, there are 15 sustainability points. But in India, they are covered only 9 principles. So we can, it's a very important point nowadays, because if anybody, foreign investor is coming for investment in the company, they are first of all, they before the ESG, they looks only the financial and operation of the company. Nowadays, they are looking for what social norms we are complying. For example, what for they are seeing the what is the gender equality in the company. And CSR, very common topic nowadays and very crucial and important. I can't say very common, but it's a very important topic. Under Section 135, we have to comply 2% of the previous 3 years net profit. And as per the schedule mentioned in the Act, we have to comply within the time framework of the CSR activities, for example, skill development, hunger, and poverty, education. So these are the covered in the corporate social responsibility. And thereafter, the management discussion analysis report already covered in last slides, and very good covered by the Pawanji also. There, like he shared, we have to mention the different type of ratios in the MDA report. So, and we have to give the certification, CEO, CFO certification in the annual report. Apart from that, we have to take auditor certificate. It can be a practicing company secretary or practicing chartered accountant for the good or the corporate governance. After before that, we have to take a compliance certificate. It's called ACS. Annual compliance certificate by the company secretary, and we have to comply with the secretarial compliance report. And disclosure is suspension of the trading. If any suspension is order received by the SEBI or any of the stock exchange, we have to disclose the suspension of the trading. So these are the some common points which you have to covered in the annual report. Basically, as mentioned by the Mayank and Pawanji, board report majorly made in the private and public company. In a listed company, because SEBI LODR govern, so we have to cover as per regulation 34, we have to make annual report. What is the basic difference between board report and annual report? In annual report, we have to disclose some other things like CEO, CFO certificate, code of conduct certificate, and corporate governance certificate, PRSR, and MDA. MDA is a part of also in the board report, but in very elaborate in the annual report. So from my side, it's covered.
Thank you, Rahulji, for giving your valuable insights on the structure of the board report, and you have given the very well explained example that how we can prepare the annual report. Yeah. Next slide. We can now
Yeah,
we can.
there are also our team has shared some links on the chat box. There was a webinar which we did a few months ago on BRSR. It was a very detailed webinar. The link for the recording of the webinar is available on YouTube channel. You can follow that link. And plus, there are a couple of other articles, very important ones related to one is related to CSR and the board report. The links of the same are also available on this chat box. You can refer to them, and we save those for your references and at any point of time. Yeah, Mayank, over to you.
So we have articulated some questions that our speakers will share their thoughts and insights. The first one is exempted entities, if any, from the provisions of the board report. As per my view, there is no company as such who is exempted from the provision of board report. But Pawanji would request you to please share your thoughts on this.
So I think I fully agree with you. I think there is no exemption for the board report for exempted for any company except for a one-person company. There's certain relaxation in rules which are they may exempt to disclose certain details considering their nature of business and the control. Except that, I think there's no exemption. Everybody, every company, and they have to prepare board report.
Yes, I think yes, there are certain exemptions to disclose the information for certain type of companies, but as such, there is no exemption provided, or there is no exception for Section 134. Next question. Uh, Disclosure of material events occurring after the close of financial year, but before finalizing of board report. Uh, I would request Rahulji to share your thoughts on this.
Yeah, we have to disclose all the things after the before the signing of the board report and completion of the financial year. It's clearly mentioned in the section 134 and SS4 clause 1.4c that we have to mention all type of material changes. The material changes can be internal or external. For example, external changes if economic things have happened, legality, new laws came and new technologies insert in the company. And internal, you can say that the operational financial things, anything related to the environment, the impact which can be impact on the company, include strike, floods, breakdowns. So we have to disclose in the annual report. It's like a similar that if you have made the invitation of the marriage and the venue has been changed, so you have to pop up that the venue
to
has
inform
been
about that
changed
change.
right. It's like that.
Thank you. Thank you so much for articulating so well. Uh, Thank you. Next question. When does preparation of board report start? Critical issues pertaining to, say, I think the preparation starts after the closure of financial year for each and every company. So the compliance officer, the company secretaries, so ever responsible, I think they start preparing the board report after the closure of financial year, and once they have key information. But would like to request Pawanji to share your valuable feedbacks on this.
What's my suggestions, considering if we consider the governance practice of particular organization? So I think you're right. The data has to be reported as of 31st March. But if you want a data in a particular shape, which is really relevant for a board report, then you have to sensitize a particular stakeholder much before the preparation. So, for example, they have to reports, they have to place certain purchase orders so that the amount can be freeze and crystallize on a particular date. So, because they have their own preoccupied with their own priorities of the job and everything, other engagements. So we have to sensitize not for the last day, but before. For example, you march on the 31st March. I would suggest you January or 2 or 3 months before. For example, conservation of energy. Okay, now conservation of energy. It might be possible they want to account the expenditure or the income expenditure in this particular financial year. So they have the 3 months. If they want to freeze all the expenditure of the conservation energy in this particular financial year, so they can take a active initiative, get the internal management approval, purchase the purchase order, and get the things done. And by 31st March, we can say, yes, this is the measures we have taken, and that go to the report. Otherwise, all the things in a fluid state, and the stakeholders say, no, abhi to in the process, and just keep on. So it depends on your culture, how you build your culture, and a lot of things depends what kind of information you want to flow in that thing.
Thank you, Pawanji, for explaining this. So next question is impact of BRSR code on preparedness for board report. And I think, Rahulji, you are in the process of preparing your company's annual report, and you can relate this question very much. And you can, you're requested to share your feedbacks on this. How BRSR is impacting, or what is your preparedness? Yeah.
Yeah, basically, yeah, it's the impact of BSR in the annual report is very important. It will enhance our disclosure requirement. BSR code mandates complete disclosure on the environmental, social, and governance. You can say the ESG aspects, including details of the company's sustainability practice, risk management, social responsibility, and it will increase the transparency and accountability of the company, because we will give in the BRSR report the sustainability performance, including carbon footprint, resources uses, and social impact. And in BRSR, we have to disclose the regulatory compliance and integration. We have to mention that how we are using coal, how we are and how much we are using renewable energy, how we can complete the existing reporting framework and integration of the ESG data. And it's a very important the stakeholder engagement and communication that they have invested in our company, how we are using their money, and how we can give to the community, local community of the company, or not only in the single state, but also, for example, we are a FMCG company. So we have always taken plastic bag from the market, and we will reuse the plastic bags in. And we have also tie up with the, you can say, the Ecokari in Bangalore, in which we have made of bags and for the raw material wastage of the plastic bag, and give to the poor below poverty persons for the school bags and that. So it's a very important aspect of VRSR code.
Thank you, Rahulji. Next question. Liability for misstatement in board report. I think there's a specific penalty clause. So as per section 134 subsection 8, if company defaults with complying the provision of this section, the company shall be liable to a penalty of 3 lakhs, and every officer of the company shall be liable to a penalty of 50,000. But what I think, liability is much much pay beyond than what penalty, because it's only a monetary penalty that the authority will levy on the company and the officers in default. Pawanji, would like to request if you can share your thoughts on this. I think the good will also be impacted if you misrepresent anything in the board report.
Yeah, I'd like to add one thing. If we go for the absolute liability, so you will find the answer in section 447 to rate with 448. What the section 447 talks about any statement, about any statement which is false in particulars while disclosing in any return, report, certificate, financial statement, prospectus statement, or other document required by the Act. If any material, it is false, or any fact to be material which have you omitted not to disclose in particular statement. So there is general liability, and section 447 talks about, and 448 talks about what the penalty it will impose on the company if you made a misstatement under section 447. And what the four and so I think this is the answer in addition to 134.8.
Thank you, Pawanji.
Pawanji, I have a
So
follow-up question on this. See, and these are combination of two of the question. One of the other previous statement you said. We talked about that board report. We get a lot of information from other functions and departments. Now, but the board report is being prepared by the company secretary. Now, and you have to also ensure there is no misstatement. How do you create an awareness within the organization about the importance of this board report? Because here we are, I think the close group which is talking is all company secretaries. They know importance of the board report. But how do you create the awareness amongst other functions who are responsible for giving you inputs? and also how this has evolved over the last few years. Because I'm seeing, Rahul, this question is also to you, because SEBI is getting more and more stringent about the disclosure requirement. Again, as Mike mentioned, it's not just the penalties, but also the goodwill which gets impacted. So maybe your thoughts on the practical aspects.
Then before I answer your questions, I'd like to add the penalty under Section 448 talks about that 10 lakh rupees or 1% of the turnover. So I'm sure you must be appreciate the kind of the liability which have if any statement goes wrong in the board report. So Jen, if I would like to answer your questions, it depends on the tone from the management, because what's my personal experience, any governance or any compliance to flourish, it depends on the top management, because you can put a certain efforts, but if the board of directors and the entire top management is with you, so certainly we can create and sensitize a good environment. That's why if you remember my initial remark, that's why if you see the board report, annual report of a certain organization, it's quite aggressive, and certain organization is quite conservative. Okay, हमको we don't want to disclose this thing. We don't why we should there could be a plethora of the cases or the question they would ask. So, if you answer your question, the moment you when you shoot an email or request the matter, over the period you can certainly establish certain principles and the awareness by conducting practical some sort of a training. When the any employee boards on a company, they would sensitize about the compliance function, about you should have a zero tolerance compliance policy, governance practices, which is available on a particular internet website and accessible to all the employees. And whenever it's a part of a HR documentation, okay, whenever we always give a PF forms and ESI challan and the code of conduct, along with you always we give the compliance policy or the governance practices, there should be some write up along with the employee. So whenever he joins any new employee organization, he sensitizes about the governance and the compliance issues, and he will take always be seriously whenever any request come. Here, this is a statutory requirement or it is a compliance matter. We should be giving data, it should be perfectly okay. We should be cross verified before we share with the data with the particular stakeholders. And by training, and this is the way I would suggest these things can be practically implemented.
Sure. And do you also get any external vendors to train your stakeholders, or it is done
I would not
in-house?
suggest you vendors we can take, but what happens, you know your company better than anybody else, any external vendors or anything. They will take a professional fee and they do. But how you can relate your business and organization, how can they establish strong link between an employee in the organization and the business? So there you can play critical role rather than relying on a vendors or external thing. But certainly, I would not say, I'm not saying you rule out the role of a vendor. Definitely, they have a multiple clients. They can bring some valuation on best practices. But there should be a complete harmony if you want to implement these things. It could be a hybrid model. It's a combination of the in-house and the external things, and both together can work and get awareness. This could be another way.
Sure. Thank you.
Yeah.
This is quite helpful.
Next is explanations in the board report in response to auditors' qualification. So I think the board should state a detailed explanation for all the observations and qualifications given by the auditor in his audit report and in the notes to the financial statements, including the reasons for such material deviations. I think, and the board should also give the follow updates or the necessary course of action for their disqualifications and observations. Rahulji, your thoughts on this?
Yeah, as you said that it's a mandatory to disclose the response of the auditor qualification. It's mentioned in the Companies Act 134 subsection 3 of the F clause. It's required board report to include any qualification or reservation made by the auditor, any type of auditor. You can say the statutory auditor, secretarial auditor, cost auditor. We have to clearly give explanation, clarity, outline nature of the qualification issue given by the auditor, should describe a specific issue or concern such as the disagreement or accounting treatment limitation or any type of non-compliance audit of scope or inadequate disclosure. And we can understand in a 5 points what is the summary, is the qualification of the remark. Provide, we have to give second point is we have to provide the board response on the thing, then disclose the impact and corrective measure to the shareholders. So requires disclosure of likely impact of any qualification or adverse remark or corrective action to be taken. And the fourth one is the statement on the absence of the qualification. Then we have to there, if there is no qualification reservation or adverse remarks in the auditor's report, then they include that there is no specific any adverse remark in our board report, and reassurance to the stakeholders, that provide assurance to the stakeholders about the company commitment to addressing issues raised, improving its governance and reporting practices.
Thank you, Rahulji. It is
We have
it's
to
quite helpful.
disclose in the we have to disclose in the annual report as a if any qualification is arise in the during the financial year. And one more thing, in a listing compliances, we have to disclose until the qualification has been resolved by the company. We have to disclose on quarterly basis in the result.
Thank you, Rahulji. I think Companies Act, secretarial standards, guidance note, SEBI LODR, each one, they are they have this provision or this point that company has to share a detailed report or a detailed information about the qualifications what the auditor has come with.
As you said, it's a very right statement, because if we are not providing the response now, it will go in the your fifth number question misleading statement, because you are hiding something. And as per the section of 134, we have to disclose before the AGM that anything is qualification is given by the auditor or not. We have to read in the annual in the AGM.
Thank you, Rahulji. For explaining so well. The next is provisions for signing of board report in case of a company under insolvency laws. And I think, when the company goes under insolvency, IRP takes the charge of the company, and the board of directors, the power of board of directors stand suspended, and all the powers being transferred to IRP. So in my view, I think IRP will going to sign the board report, but Pawanji, your expert comments are required on this.
So, Mike, this is quite a Mada, I think, trickier one, because what happens in the Companies Act, if you see the signing of a board report by director, okay, the word director has been defined. Okay, and under the insolvency law, if we talk about the Companies Act, there is no, I would say, clause or the section which says ki under the insolvency, this report has to be signed by the IRP, insolvency professional. Okay, because this entire, if you see the structure, they have never been thought of. I don't know. Now they know very well 2013 there was an act. And under the insolvency law, the entire powers of the board is suspended and taken over by the IRP. So what I suggest, we have to take a harmonious interpretation to ensure that both acts should give a meaning and effect. And I would suggest should be signed by director as well as IRP to fulfill both the requirement. Because if the Companies Act says they have not recognized the word IRP, then otherwise they could have, and the parliament has well known that this is the act is already there. So they could have think ki this has been signed by IRP in case the company is under the insolvency. But this is not the situation, not the language has been used in the Companies Act. And since the insolvency law deals with this particular situation, special statute, so definitely, unless it's a repeal or override the particular section 134, then we would say it's signed by the IRP. But in the IRP, in the IBC code, there is no repealing or the overriding effect of the section 134. So what may suggest we have to harmoniously interpret both the acts. It should be jointly signed by a director as well as IRP professional to avoid any situation of the debate or the confusion or any interpretation issue.
So, sir, your suggestion that the board report should be signed by IRP and the directors as well.
Right. To
So,
give effect to
mm,
both the act.
okay, because both have the responsibility to carry out
Right.
the operations. IRP has the power of the board of directors, but the power of directors, they are still there. So both, IRP and directors will going to sign the board report.
No, right. You raise a good point because if you see the entire scheme also, they have to support the IRP also in running the business. So technically their powers are suspended, but they still are responsible to give
Okay.
full support to the IRP professional.
Yeah.
So I
So
would
I
say
think
it could
the
be one, it's
directors
a
and
cooperation also.
employees,
Yeah.
they are there if, irrespective the company's insolvency or not. But the directors and employees will be there to help the IRP to, for that whole process. So I think directors have also the responsibility for carrying out that process along with the IRP.
Right.
Right. Thank you so much, Pawanji and Rahulji. Over to you, Jain sir, for your concluding remarks.
Thank you, Rahul. I know we have held you back for more than what you had committed. So thanks for all your time and an interesting insight. Pawanji, thank you so much. In fact, quite a few
Thank you.
Discussions or the pointers which you gave were very insightful. In fact, this is IAP one and how you have read interpreted both the different laws and the expectation from both the regulators. I think this is quite helpful. To all the viewers, rather more of a lighter side, Rahul. Before I conclude, so I was just thinking, I said if it's a board meeting of a private limited company, we should call it as a court marriage. So you're not going to invite the larger audience.
Right.
So, so that more on the lighter side. So thank you so much, everyone. It was quite an insightful, interesting session, and we look forward for your continued support and encouragement for us for future topics. Do write. Feel free to write to us. info@lawbit.com, or you can also take down my email ID if you feel want to give us some suggestion on how we can choose the different subjects in the coming webinars. And if you want to also participate, be our guest, feel free to write to us. We'll be happy to increase our audience bases and our guest speakers base as well. I look forward to hear from you all. Thank you so much.
So,
And
so
our
then,
recordings will.
Then I just take a one liberty, just sorry to cut and the
Yeah,
way like
please.
you asking ki how we improvise the webinar. So I think rather than going through the conventional way of presentation, I think you can throw a one topic and ask the questions. What are the so it could receive a 50-60 questions. And one and a half hour we can deliberate upon the question because a lot of things from answer to those questions because I'm sure all the seasoned professionals in there in this entire forum. So we come out from certain exchange of ideas or information. We can reach our knowledge, and will sort of a hybrid mode, some sort of some presentation and the answer to those questions, and we can conclude sort of a topic. Say for example, data privacy. Now there could be 50 questions on to you. We can do certain research 15 days before that of the call, and just take a some prominent question because we cannot take 1.5 hour all the question. We take some prominent questions and answer to those questions will take earlier 30 minutes, or then we give some sort of a structure of the entire privacy laws and all these things. So this is my suggestions. If we can this thing, if we can
Sure, I think
upfront
this.
ask the question.
Sure, I think this is quite quite thoughtful. Let us also look at how we can create a platform where people can come and put their questions and queries on the topics which we have selected. So let us also work back on creating such kind of a platform as well.
From my
Thank you,
side,
Pawanji.
thanks to all Jen
Thank you,
Ji,
thank you.
Pawan
Thank
ji,
you.
Mayank ji, and all of the
Thank you, Ram.
colleagues.
Thank you,
for
Jen.
this.
Thank you, Jen.
Thank you.
Yeah.
Thank you.
Thank you.
Thank you.
Thanks.
Have a good day, everyone.